Welcome to the Tax Clinic. In our previous 2 episodes, we mapped out which specific businesses are required to implement electronic invoicing and established the exact dates when each implementation phase will begin. But before we move any further into the timeline, we need to address a gap in the foundation. What exactly is electronic invoicing? Operating without a strict legal definition of this term leaves businesses exposed to expensive, completely avoidable compliance failures. Talk to most business owners or finance professionals, and you will hear a common assumption. If an invoice is generated on a computer, it qualifies as an electronic invoice. They rely on the formats they use every day, a PDF sent over email, a scanned printer image, or a Word document. If you share this view, you are certainly not alone. It is a completely logical way to think about digital paperwork in modern business culture. However, under the UAE's new legal framework, none of these formats meet the standard. A PDF is essentially a digital photograph of a piece of paper. Because a computer cannot independently extract the line items, an accountant still has to type the numbers in by hand, defeating the entire purpose of an automated tax system. The new operational reality is dictated by Ministerial Decision number 244 of 2025. This legislation defines the electronic invoicing system as the macro environment. It is an overarching electronic network built specifically to issue, send, exchange, and share data. Operating inside that massive network is the microcomponent, the electronic invoice itself. This comparison shows the distinction clearly. The electronic invoice is a highly structured digital format, engineered specifically for machine reading rather than human reading. Because the data is organized into U-the-form fields, computer systems can automatically validate, exchange, and process the figures without a single manual keystroke. True compliance means shifting the burden of data extraction entirely away from your accounting team, handing it over to automated computer logic. To see how this logic works in practice, let's track the chronological journey of an invoice from the exact second a supplier generates it. The moment the invoice is issued, the structured data leaves the supplier's internal software environment. As this flowchart illustrates, its first destination is a secure external checkpoint, the supplier's accredited service provider. This provider has a strict mandate. Their system checks the code to validate its structure, ensuring the formatting is flawless before packaging it for secure onward transmission. This invisible third-party checkpoint acts as a gatekeeper, guaranteeing that all data entering the national system is standardized and legally compliant before it ever reaches a trading partner. Following the path forward, the cleared data travels directly across the network to the buyer's own accredited service provider. Here, the receiving provider executes a final validation check. If approved, the invoice drops directly into the buyer's internal processing system for payment. But looking closely at the network split, a critical parallel event occurs at this exact same moment. The required tax data from that transaction is simultaneously transmitted to the Federal Tax Authority's central data platform. This simultaneous routing operates strictly in accordance with the framework established by the Ministry of Finance. In fractions of a second, a highly complex multi-party financial and regulatory transaction is complete, achieved without a single manual data entry error. This automated sequence demonstrates why the PDF invoice is obsolete. The new system represents an evolution of data exchange, leaving superficial formatting behind. The ultimate vision for the UAE is a fully connected, invisible digital ecosystem that securely and seamlessly links private business activity directly with the tax authority. Now that we understand the definition of this system, we must look at its scope. Will every transaction and invoice generated by your business be subject to this new electronic routing? The precise parameters of which invoices get caught in this net and which are exempt is exactly what we will answer in our next episode. Thank you for watching the Tax Clinic, where we simplify tax legislation and turn it into practical business decisions.